This Wealth Wednesday, we're talking about a very stressful part of life, and that's dealing with job loss. We have investment specialist Yvonne Delry from FirstOntario Credit Union and Aviso Wealth joining us here. Thanks for joining us today.
Thank you. Thank you.
So I want to talk about, we can't always predict when job loss will happen, but there are ways we can prepare ourselves for it.
Yeah, so it's a very devastating time to find out that you've lost your job, the plant is closing, whatever the situation is. So there's a couple things that you can do while you're working. So from a professional standpoint, invest in yourself. So a lot of jobs already have education built in, continuing education, and that is part of your licensing. But even if it's not, it's a good idea to participate in seminars, training sessions, so that you stay relevant, not just for your existing employer, but if you need to seek additional employment. Then from a financial standpoint, we've talked about in previous Wealth Wednesdays creating a budget. So understand what your spending habits are, what are your fixed expenses, what are your discretionary expenses. Rule of thumb is to have 3 to 6 months of savings set aside for your fixed expenses, and this will ease a little bit of the stress as you transition maybe into some new employment and leaving your existing employer.
Yeah, definitely having that emergency fund ready to go.
Absolutely. Yeah. Absolutely.
So when that job loss does happen, can employees expect payouts from job losses?
Yes. So the first thing is to look at employment insurance, which is offered through the Government of Canada. This is a benefit if you have lost your job through no fault of your own. So it pays a percentage of your previous earnings up to a certain point. There is termination pay that can be expected if you do not get pre-notice that you're going to be terminated, and this would come from your employer. So it is a lump sum up to a certain amount. There is a severance package that can be expected from your employer, again, if you lose your job through no fault of your own. So this can come in two forms, either as a pay continuance, which means that you get systematic kind of payments and income tax is then paid as you receive the funds, or you can receive it as a lump sum. There are structures through jurisdictions, federal, provincial, territorial, but you may receive more than just the standard amount. Okay. It is taxable income, so what you do with it depends on taxation and if you need the money. If you have RRSP contribution room, you can put that lump sum in your RRSP and then push forward the taxation for when you remove it out of the RSP.
Gotcha. So we have about 1 minute left. I want to get to our last question. So if the employer provided retirement savings, what are some of the options for moving that around?
So there's two forms of a registered pension plan. One is if it's a defined contribution, so that you can just take the amount and transfer it into a locked-in RSP. Okay. If you have a defined benefit, then you can either keep it with the existing employer and receive the monthly payments upon retirement, transfer the accumulated lump sum to a financial institution of your choice, or transfer it to a new employer if they're with the same jurisdiction. We want to also stress, if you are concerned that you are not maybe getting compensated adequately, please seek legal advice and make sure that you know all of your options. So dream, plan, achieve.
For sure. Well, thank you for all of these tips. Very, very helpful for us. We're going to get all of that up on our website, chch.com. We'll have more Morning Live for you coming up right after this.